Well, welcome to 2023. It's a brand new year, and it's time for your first Ask the Expert segment from Sprott Money. Remember, these are videos we put out once a month with an expert in the field of precious metals and the economy, and give you a chance to ask questions of said expert and see what they think about the big issues affecting the metals going forward. I'm your host, Craig Hemke, and joining us for the first Ask the Expert of 2023 is my old friend, Ronnie Stoeferle. Ronnie, managing director, I think, Ronnie, and partner at Incrementum. Is that the right way to introduce your title?
That's pretty right. Hi,
And
Craig.
really,
Happy New Year.
Happy New Year to you. And you're famous for a lot of things, my friend. An alpine skiing legend, that's for sure, but also one of the, if not the principal author of the In Gold We Trust report that comes out every May. If you're interested in the precious metals as a retail investor, institutional investor, high net worth individual, that report every May is something that everybody reads and everybody looks forward to. So Ronnie's a internationally known expert in the precious metals. It's fun to visit with him. Ronnie, before we get started, tell everybody about what you do and your firm, and if they're based in Europe or wherever, how they can access your firm services.
Well, actually, the question, what I'm doing is a really good one, and sometimes I really don't know because there's so many different things that I'm doing. Primarily, I am managing partner at Incrementum, which is an asset management company in Liechtenstein. We're managing 6 investment funds. I'm managing, for example, one inflation protection fund that has done very well over the last couple of years. Besides that, I'm also, for 15 years now, I'm publishing the In Gold We Trust report. It's published in German, English, in Mandarin, and also in Spanish. Probably one of the most widely followed publications on gold. And then I'm also on the board of directors at Tudor Gold and Goldstar Metals. So I'm also very active in the mining space. And yeah, that's basically it. And Craig, I can tell you, we are already starting to write In Gold We Trust 2023. And I think there will be many, many topics to discuss this year again.
No doubt about that. Gosh, you just wonder by the time you publish that thing, it's going to be in May, correct?
Yeah.
Hey, what will the world look like by then, Ronnie? Well, I've got a number of things I want to discuss with you. Again, before we get started, these videos are always brought to you by Sprott Money. Sprott Money, a company you should always keep in mind whenever you're in the market for precious metals or storing that metal. I was just on the site this morning and saw they've got a great deal on 10-ounce Royal Canadian Mint silver bars. Never a bad time to add to your stack. So go to sprottmoney.com or call them at 888-861-0775. Ronnie, let's start with kind of the macro. This is that time of year where I always write my annual forecast, and you try to focus on that big picture stuff. You can really get caught up in the trading sometimes and get wrong-footed if you get too cute watching price. But if you get the macro direction right, like you often do at your firm, and that fund you had last year had a tremendous year. If you can get the macro right, you're going to be okay. There's a lot of question about the macro situation as we begin 2023. There's all this talk of a soft landing and the Fed keeping rates elevated all through the year. Where do you think this is headed? The data seems to be pointed downward, but what are your projections as we go through this year?
Well, I mean, it's been a terrific start into the new year. It almost feels like the everything bubble is back again.
Mm-hmm.
But I'm slightly cautious, I would say. I think it's primarily due to the reopening of China, and of course, there's an enormous amount of pent up demand after the Chinese economy was basically locked down for 3 years. But I think, if we have a look at markets, the markets aren't really buying what the Fed is selling, because the Fed continues trying to sound very hawkish. And I said in a couple of interviews, I think that Jay Powell will be nominated for the Academy Awards, because the whole market really believes in this narrative of the newfound hawkishness of the Federal Reserve. I don't really see it. And if we have a look at market developments recently, I think that the markets are currently believing in several outcomes simultaneously, but I think they cannot all be right. So actually the market thinks that the Fed funds rate will peak at 5%, that we will only see a shallow recession or a soft landing, whatever you want to call it. The market sees a rapid decline in inflation over the next couple of months. But on the other hand, it also sees very strong earnings growth and stable margins. So from my point of view, it's not gonna, it's that doesn't really add up. We're seeing, based on Fed funds futures, actually they're pricing in nearly 200 basis points in cuts between June 2023 and December 2024. So a cut of this magnitude doesn't really rhyme with the soft landing. So on contrast, we are seeing that earnings are expected to grow by 9%, which basically means that equity analysts see that a recession will be avoided, because typically during a hard landing, earnings decline by roughly 20 to 25%. So something's got to give. From my point of view, we will see strong disinflationary forces over the next couple of weeks. Bear in mind, Luke Groman pointed that out, that the BLS will implement an improvement in the calculation of the CPI. So starting in February 2023, they will update the spending weights in the calculation of the CPI. I don't know. Perhaps this will have a further effect on the disinflationary trend that we're seeing. So my game plan, Craig, is basically disinflation for the next couple of months. This will also imply that the Federal Reserve will have less pressure to be hawkish. So actually, due to the recessionary risks and the disinflation, I think they will become less hawkish and less restrictive over the next couple of months. I think the gold price is already smelling that. But this will also coincide with the next inflation wave. And as you know, we manage our inflation protection fund based on our inflation signal. It's a proprietary signal. And in June last year, it told us that the momentum of inflation has peaked out. So we actually saw, based on our indicator, that the worst is over for now. So we went basically, we got stopped out. Most of mining positions, most of the commodity positions, which was fantastic for our performance. And now, just recently, a couple of days ago, we got the full rising inflation signal. So this signal is really looking through the rear view mirror. So it's basically telling us already a couple of months in advance what's going to happen. And I think that the next inflation wave is already building up. So that's kind of our macro picture that we're having.
So to that end, do you expect the global economy, the U.S. economy, to slow here in the first half of the year and allow the Fed to declare victory? We're going to lose in that year-over-year inflation data as those first 6 months of 2022 come off the board and are replaced by the first 6 months of this year. That year-over-year number is going to come down pretty quick and pretty soon going to be well under Fed funds. Do you think the Fed will declare victory by summer and then start saying, oh, look how slow the economy is, we got to start cutting?
Absolutely. I think we shouldn't forget that there are elections coming up next year in
Well,
in
yeah.
the United States. So therefore, I think everybody wants to see lower rates. We already kind of see what's happening to the housing market. We know that the real estate industry is essential for U.S. consumer sentiment, and we all know how mortgage rates exploded. So I think in the most interest rate sensitive economy ever, um, I think it would be naive to think that in an environment of one of the most aggressive rate hike campaigns ever,
Hmm.
that this doesn't have any consequences
Right.
for the economy. And you know, we keep hearing that Jay Powell is the new Paul Volcker. Just you know, two numbers to have in mind. In 1980, total U.S. non-financial credit was 3.9 trillion. Currently, it's 67.6 trillion. And the Fed balance sheet in 1980 was 154 billion. Currently, it's around 9 trillion. So I think, you know, if you compare Powell to Volcker, perhaps he wants to be the new Paul Volcker, but the fundamentals are so different,
Yes.
and the rate sensitivity is enormously higher than back then. So therefore, I think that um, the time lag of those rate hikes is vastly underestimated by the Federal Reserve and most economists, and we are already seeing how it's playing out. Have a look at the composite indicator, the composite index of leading indicators. Just have a look at the ISM. It's clearly showing that the U.S. economy is slowing down dramatically, and it doesn't look like a soft landing to me.
Or a hard landing. Exactly. Ronnie, one of the Sprott Money customers wrote in and said, "Okay, we've had this great rally of gold, obviously looking forward and anticipating all of this. What do you think about price? Do you if someone is looking to average in, buy themselves some more gold, or start buying gold for the first time? Is it something that you just start doing on a regular basis? Is it, you catch highs and you catch lows? You wait for a pullback? Are you optimistic about where price is headed over the next 24 months? What do you think about gold?
Well, actually, you know, it's in a Bitcoin world. Everybody is talking about DCA, dollar cost averaging, and this is something that I think makes totally sense in the gold world as well. From my point of view, well, actually, I think many people were um, um, a bit dissatisfied with the performance of gold last year. On the other hand, I would say people tend to forget that you know, not only equities were down significantly. The S&P was down 18% last year, but also the bond market was down significantly last year. So for example, the iShares 20-year Treasury ETF was down 32%. The Nasdaq was down 35%. So in that year, gold actually, I think it did its job quite okay. So in dollar terms, it was down 0.3%. On the other hand, in euro terms, gold was actually up 6%, and in basically all other currencies, be it the euro, be it the Japanese yen, the British pound, and so on, gold made several new all-time highs last year.
Yeah.
So actually, it hasn't done so poorly, and I think that um, therefore, my take would be that this year we will also see new all-time highs in the dollar price of gold. From my point of view, it's now for the time being, we saw this pretty strong rally. So I would see gold perhaps taking a breather over the next couple of weeks. But actually now we are flirting with the levels of the old all-time high at 1910, 1911 that we've made in the year 2011. And I think, you know, from here to the big all-time high, it's only slightly more than $100 left. And from a technical point of view, obviously, once we go above that level, there are no resistances
Yeah.
anymore. So I think we're not too far away from a major breakout in gold. And having a look at the ETFs, having a look at sentiment, talking to institutional players over here, I think most people don't really recognize that gold is flirting with new all-time highs. Yeah. So over here, I would say most of the let's say financial players couldn't care less about gold.
Yeah, there's nothing new in that, right? It's our friend Grant Williams always used to call it "nobody cares." Remember
Yeah.
that
Yeah.
from years ago? And you remind me. I've been writing a lot so far this year about how economically and monetarily this year looks like 2010 and 2019. And I also remember in 2019, Ronnie, was the same kind of setup. Gold was making new all-time highs in all these other currencies except the dollar. And I remember sitting back and telling people, just it'll be the dollar's turn soon enough. Just give it time. And I hadn't thought about it as that is another parallel to this year.
Yeah, and perhaps another parallel would be 2018. We remember the pivot back then. I think there was this emergency meeting on the
Yep.
24th of December,
Yep.
and because the fourth quarter was a disaster for almost all asset classes, while
Yep.
gold held up pretty well.
Yep.
And then in 2019 and 2020, gold was up, I think, 18 and then 20% in US dollar terms. And,
Yep.
and I think also now, obviously, this pivot will be different than the last one because inflation numbers obviously are significantly higher. But I think that gold is already kind of smelling this pivot, this peak hawkishness,
Mm-hmm.
and we made a chart with a couple of pivots, and actually it was fascinating to see that gold always discounts those paradigm changes earlier than commodities, earlier than equities, for example, earlier than silver. And I think it's just the fact that gold is traded all over the world in every culture, in every part of society. Gold is something special, and I think this is this collective wisdom that the price of gold holds.
Yeah. Ronnie, in our remaining time, I want to ask you about commodities in general, because I know that's a big part of what you follow in your daily work too. One of the things I wrote about, and if anybody wants to read it, it's right. You can go to sprottmoney.com and check the insights tab, and you'll find the what I call a macro cast I write in the first week of every January. And one of the features again this year was that Chinese demand you talked about. We watched that Chinese credit impulse, and it finally looks like it's really going to surge this year with that zero COVID policy going by the wayside. And this all comes at a time when, Ronnie, I've seen charts of global stockpiles of all the industrial metals, copper, zinc, lead, nickel, aluminum, and they're all trending down dramatically. Again, not just in London, but, in Shanghai, and if you want to count what there is in the US. And now all of a sudden you've got all this surging demand. Do you think we could be in I don't want to call it a crisis, but could we reach a point here in 2023 where this commodity demand surges so strong that it really ripples through all the way into gold and into silver?
Yeah. Well, I think that this commodity bull market is still in its, let's say, the kind of the first inning of the super cycle, and I think it will primarily be driven by the capex cycle. We wrote about that last year already, basically
Yeah.
saying that over the course of this brutal bear market in commodities, there was very little incentive to invest capital into new projects, into existing projects, into infrastructure, and so on. So now, where we're seeing basically this paradigm shift, when it used to be, I think Sultan Posa wrote that it used to be the US dollar is our currency, but your problem. We know
Right.
that quote from John Connelly, but now it seems our commodities your problem. And I think
Mhm.
that 2022 was really the point in time when governments actually realized, well, this commodity thing, that's not something dirty or something bad. Actually, this is the foundation of our societies, the foundation of our industries. And I think there was really uh, people started rethinking actually the supply, the stable and reliable supply of commodities at whatever costs. Just have a look at the natural gas prices. We know that European governments completely panicked in late summer last year, and they bought natural gas at prices, whatever it takes, just to fill up the storage facilities. Um, and I think we could see similar developments also in other commodities, in other strategic commodities. We're seeing that, for example, when it comes to copper, when it comes to as they are being labeled now, green metals like nickel, like lithium, also to a certain degree silver. It's absolutely astounding how much new demand will come from the solar industry. We're seeing actually that that the supply is not really elastic, so it doesn't really react to rising prices. And I could expect spikes in these commodities. From my point of view, also in the energy space, I would say that the price of crude has probably made its lows for this cycle.
Yeah.
So in a nutshell, I'm seeing that commodities are kind of celebrating some sort of a renaissance. There is a rethinking coming from bureaucrats. We will see much more of direct offtake agreements um, uh, between governments and companies, obviously, with mines. We will see much more investment being financed by governments. Just have a look at what has been decided recently in the European Union. Sorry. And then on the other hand, we are seeing that obviously it's still a very much underinvested pocket of the market. Even though the price performance was pretty significant recently, most institutional players don't have any allocation in commodities yet.
Right.
Why? Because it's not easy due to ESG policies. So therefore, I think that of course it will not be a straight line, but I expect the next couple of years in the commodity space to be very, very, let's say, interesting and probably rewarding.
Great stuff, Ronnie. It is always so much fun to visit with you. I always say, if you're going to follow gold, you got to follow everything. It's not just a dot on a screen, and you definitely follow everything. I mean, you kind of have to with the job that you've got, but also in this ongoing project that you have every year of writing the In Gold We Trust report. Again, we'll look forward to that by what, end of May, something like that. Is that about the usual publication date?
Yeah, I think 24th of May is the big date.
Oh boy. Oh, the deadline is counting down, my friend. What are you
But
doing
we
talking to me? You got work to do.
yeah, I know. But now, for actually we expanded our range of products for the In Gold We Trust. So we now also have our monthly Gold Compass, which is a fantastic publication. The best charts are published every month at the beginning of each month. It's available totally for free on our webpage, ingoldwetrust.report. Then there will be a preview chart book, and then 24th of May, as we said, that's the big date for In Gold We Trust 2023.
And as you said, it's all free, and always that the updates are very, very helpful. And again, probably anyone can just search In Gold We Trust into Google or something like that and go straight to that website. Do you put in your email address or something? Can you get notified, or you just need to check it every once in a while?
No. You can register for the for the report. Otherwise, just download it without having to submit your email address or anything
Perfect.
on the 24th of May. It's important for us to really to put out solid research about gold, not in a gloom and doom, everything will go to hell. point of direction, but just a sober analysis and make a solid case for gold. Not only for institutional players, but also for high net worth individuals, for retail investors. I think that's really important for us to perhaps make a little difference and helping people to protect their hard-earned savings.
You bet. Yeah, you guys do a great job. Again, you're a wonderful advocate for sound money, a big ally in our fight. I know Eric really appreciates and reads all that you do as well. And again, so thank you so much for your time. For everybody on the way out, again, please remember this. All of this comes from SprottMoney.com. Check out their site. Anytime you're in the market for precious metal, if anything, give them a like or a subscribe on whatever channel that you're watching this so that they can help cast a wider distribution net. Every little bit helps. And then check back next month for another Ask the Expert. For now, though, we'll sign off. Ronnie, thank you so much for your time. I hope you have a great rest of your day.
Thank you very much, Craig. All the best. Take care, my friend. Bye-bye.
You do the same. And from all of us here at Sprott Money News and SprottMoney.com, thanks for watching. We'll have another video for you sometime very soon.